Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you, and we're going to take a look at our ag commodity trade, and we'll take a look at futures in just a second. We had all these USDA numbers that came out yesterday for crop progress and crop condition. One in particular was related to the amount of wheat that is already headed out. And let's take a closer look here and see who the leading states are in that particular category. So for the most active wheat heading progress, we have Texas leading the pack at 40% complete with their wheat heading already. Remember how cold it has gotten in the south here this week. The 5-year average, 32%. It's actually ahead of schedule. Arkansas, 32% headed on their wheat. Their 5-year average, 26%. And I know it got pretty cold in Arkansas, too. Oklahoma, 15% headed. Their 5-year average is 16%. North Carolina is 6% headed now versus a 5-year average of 9%. And California, and we had to double, triple, and quadruple check this, 5% headed as of last week, and they normally would have 61%. Wow, are they off of the pace in California? Anyway, let's with that in mind, let's go ahead and talk with our guest. And we have Brian Hoops on the line of Midwest Market Solutions in Springfield, Missouri. Brian, what do you think of those wheat heading numbers there, especially when they're talking about Arkansas being so far behind?
Yeah, you know, it may be a good thing that we are far enough behind that some of that crop has not advanced more and matured more when we're talking about these cold temperatures that could really end the growing season for that wheat crop. So, you know, we've had a real weird winter, so to speak, as, you know, far too dry, a lot of snow, some ice, and cold temperatures. We followed it up with a lot of heat, wind damage, and now we're back into cold conditions once again. So the wheat crop is really struggling. That's reflected in our winter wheat ratings that came out yesterday afternoon. There was a decline in the winter wheat belt of Kansas and Texas, Oklahoma areas, but the spring wheat belt actually improved. And so I think you're going to see some spread activity going forward, traders wanting to buy the Kansas City market against Chicago. And they are also probably going to try and buy Minneapolis because of some planning delays against the Chicago market.
And I stand corrected on the Arkansas wheat. I didn't mean to say that they were behind their heading pace. They are behind in temperatures. They're below where they should be. On the spring wheat planting progress, we had those numbers as well. And just to back up your point there, Brian, the only states that even register planting on spring wheat would be Washington State at 37% complete, and that's behind the 52% average. Idaho, 24%. They normally would have 49%, and the only other state that even checks in was South Dakota with 1% of their spring wheat in the ground, and their 5-year average is, believe it or not, 34%. So, man, are they behind the pace. And let's take a look at our current market prices here. Let's go ahead and run through these for everyone. On the corn market right now, we have July down 1 1/4 at 3.89 3/4, and December down 1 1/2 at 4.05 3/4. It's kind of been hovering here for about an hour. Soybean trade right now on July, we are now trading at 10.54 1/2. We're 1 1/4 higher. November 2 higher at 10.42 1/4. Kind of quiet in the soybeans now. Now in the wheat trade, we have Chicago July currently showing a last trade of 4.83 1/4. That's now up 4 1/4. In the Kansas City market here, we have the July contract now quoted at $5.75. We're up 3 3/4 today. And in that Minneapolis spring wheat market, we were just talking about how far behind they are. Looks like it's only good for a rally of about 2 3/4 cents on July right now. It's priced at $6.19 per bushel. And if we go to the cotton market at the present time, we currently have that July contract at 82.56. That's down 66 points on the day. December down 21 points at 78.33 cents per pound. We'll come back in a moment and rejoin our conversation with Brian Hoops. We'll talk about our livestock trade when we come back. And we're back with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. We're going to talk now about our livestock trade. And Brian, I was looking at our livestock summary from yesterday. Nothing showing up for cash cattle trade. Now, we did have a higher tone last week when we wrapped up the week, but so far I haven't heard much talked about this week. What do you hear when you talk with producers around the country about what might happen in the cash cattle market?
Yeah, I think they're going to look for at least some steady type money, especially in those northern plains of the Dakotas and Nebraska. There's possibility of some significant death loss. We're still trying to confirm with some clients, but these young feeder calves that have come out just recently, they're the ones that are most susceptible to some death loss, and that would be bullish longer term if we did lose those animals. But certainly, if you're in a situation where you've had to clean out feed bunks and fight ice, snow, storm, you're not going to be too quick to market that cattle, but you want to be paid for it. Certainly, you don't want to sell at any type of a discount. So, look for the cash in the north, I think, to be a fully steady, possibly higher market. Show list numbers are larger, and that probably is going to affect more of the southern belt of the trade. Kansas and Texas, we see bigger supplies there. That may be more where you get a steady type market.
Yeah, we've been hearing more talk about the pasture conditions in the southern plains, the southern high plains, I should say, to be more accurate, where the grassland just does not have any moisture to bring it back here. So that is leading to a lot of maybe some calves or cattle heading out there into the feedlots a little earlier than normal this year. Not much wheat to graze out there.
Yeah, that's the problem. Is you're losing some wheat grazing capabilities. There's not a lot of pasture out there to begin with, and some of it's in rough shape because of the winter. We've talked about temperatures warming up for a period of time and then freezing once again, and that really slows the growth and development of any hay or pasture lands.
Live cattle right now, we have the nearby April contract up $1.25, Brian, at $118.40, and the June contract up $1.22 now at $105.40 per hundredweight. And even though it's up over $1 on the day, it is off of its earlier high by roughly about 80 cents right now. We do have August showing an 80-cent gain. It's quoted at 105 even per hundred. On the feeder cattle market right now, we currently have that May contract 64 cents higher. We're at 141.02. Kind of in the middle of our trading range today. It's been running, about $1.70 wide or $1.60 wide, something like that. The August contract on the feeders up 97 at 145.75. So they're hanging on to gains here so far. Last week at this time, they would open up higher and then sell off by the time we got to the noon hour. Now, if we look at the lean hog trade, now this is the one that opened up under pressure today and then firmed up, and now we have gone mixed. Nearby May is actually down 50. The June is down 12 at 76.68. July back to unchanged, and then the far out deferreds, maybe a few pennies higher. What do you see happening here in the lean hog market here this week, Brian?
Well, we're expecting to see another wave of some snow and bad weather coming through on Wednesday in the Minnesota, northern Iowa area. If that happens, that could disrupt transportation issues, should increase the cash bids Thursday and into Friday going into the weekend. So I would expect to see a little rebound in the futures, anticipating that cash market is going to catch a bid and move higher.
All right, good to visit with you, Brian. Thanks for the update on the markets. Brian Hoops, he's with Midwest Market Solutions, and he's based in Springfield, Missouri.